And today we'll be speaking on the topic accounting for small businesses. Accounting for small businesses. But before I go ahead, just to be sure everyone is following, let me just let me just have one or two people introduce yourself in the chat box, your name and what you do. Just very quickly, we'll do that in the next 3 minutes. Your name and what you do, just put on the chat box. While you do that, I want to encourage everyone to be on this call. Don't be on this call and be doing some other thing, because there's a lot set out here for you to learn. Yes. Okay, Chukodi DK. Okay, what do you do? We have about 31 people in this class, so please, guys, go ahead. Okay, Chukodi is into digital signboard for local ads via QR code menus. That's great. Yes. Who else is? Olado Jabimbola. I make and sell crochet wares. That's great. Hassan Ahmed Bolaji, a debt recovery supervisor. Makes sense. Yes. Manoluapo. Okay, my name is Chisom Kaolisa. I am a nail tech and makeup artist. Oh, they do makeup for us. Anoluapo Agbede, makeup artist and hairstylist. Okay, that's good. I'm into leather bag making. Can you guys still hear me? Hey, can you hear me? Very
Yes,
well
sir, you are
developed.
back. We can hear you
Yes,
now.
we can
Yeah,
hear you, sir.
yeah, I lost you guys for a moment. Apologies. So, okay, please let me share my screen post. So I got the last person who is a web developer. Yeah. All right, guys, that makes sense. I mean, sometimes when you find yourself in just a place like this, you just want to say your name and what you do and all of that. It's important. Peter Adisai, counseling psychology, founder of Prexol Edu Solutions. Osinusi Olaoluwa, I'm a student. Okay. Very web developer. Somebody's asking if it's PHP. That's it. You never can tell who will be on the call when India says. However, because of our time, my name is Elijah Falabi, and I'll be your facilitator for the day. What do I do? I'm a finance professional, and I help businesses grow their finance, also do a little bit of financial reporting, tax compliance, amongst other things. And I I'm also into facilitating sessions around, things that I'm doing, financial management, online safeties like cyber security, and also soft and employability skills, where we, speak to people around how to ease interview, how to have, state-of-the-art CV, right, and some interview etiquettes amongst other things. And on the side too, I'm also a tutor. I take courses around accounting and financial management to A level to even professional classes, amongst other things. So let's get into the business of today. So everybody here, or let me say about 80% of people here, have one or two businesses they are running. That is why this session is very, very important for you. So let's get into it. Accounting for small business. As we start, let me ask, who can tell me what is accounting? What do you understand by accounting? Just unmute quickly and tell anytime I ask a question you are meeting, mute, tell us your name and answer the question. So what's accounting? Nobody's talking. What's accounting? Can you hear me? Can anyone hear me?
My name is Hazan Ahmed Bolaji.
Okay.
Accounting is a financial statement that records every daily transactions of a businesses.
Okay. Okay. That makes sense. So you're trying to record the daily transaction with business. Thank you very much for that. Any other person, please, quickly.
Good morning,
Yes.
sir.
Yes, please go ahead quickly.
My name is Mary Jane Okoye.
Okay.
Accounting to me is basically keeping records of the financial transaction of a business in order to be able to reference it in the future, in order to determine if the business is making profit or if the business is losing. Thank you.
Making loss. Okay, thank you very much. So just a quick one. Thank you for that definition. So when you talk about accounting, there's a difference between bookkeeping and accounting, right? So maybe it's important I draw the line. When you say bookkeeping, all you're trying to do is to keep records, right? You want to keep record of your economic events, or otherwise known as your, financial transactions. That's what bookkeeping is all about. Record about sales, about purchases, about the expense. But accounting now way a step higher. So now, transforming those, record or data into financial statements. Not only financial statement that can now help the users of that financial statement to make informed decision, right? That's accounting, right? So accounting has just gone beyond even preparing financial statement. You also want to be able to draw valuable insight from the information or data amongst other things. And somebody mentioned profitability. Of course, yes. I mean, when you prepare financial statements, one of the financial statements you prepare, which I'll still show you in a bit, is your income statement. And your income statement, is prepared to show the financial performance of the organization. In other words, to show whether we are running at a profit or at a loss. So, of course, if I know my business is running at a loss, it helps me make informed decision. I want to look at maybe the product line that is probably not bringing enough revenue, or if the product line is even bringing enough revenue, it could be that, your product line, that product line is bringing enough revenue, but the challenge might be that maybe we are incurring more expenses than we could have. So accounting helps you. I'm able to make decisions. Okay, I think we need to cut down this, we need to cut down this, because in the first place, I have a statement that documents over a period of time what has happened in the business. Do you understand what I'm saying? So that's what accounting is about. Then when you talk about business, right? A business is just like a venture, like in which people go into. I'm trying to define this as much as possible in a layman's language, because I understand that not maybe about a larger percentage of you here might not have a finance background. You understand? So you might be using some of those terms, right? So when you talk about a business, it's just simply a venture, where two or more persons go into with a view to making profit, right? It's very important. The reason why you go into business primarily is to make profit. Although, before you can make that profit, if you dive deep down, before you can make that profit and make that business. Can you mute yourself? All right. So I'm saying that, if you are not talking, mute yourself. You distort my train of thoughts. Eh? All right. Thank you. Right. So, some of this person. All right. All right. All right. Thank you very much, guys. Okay. So I was talking about some businesses. So I said that.
Ultimately, sorry, but if I'm just going to say this. If you turn on that mic again, I will not have any option than to remove you from the meeting. And if I do, you won't be able to get back on the call. So please keep your hands away from the speaker so that the class can go on smoothly. Thank you.
All right, thank you very much. So I was saying that although, I mean, what you are set out to do as a business is to make profit, but what will make you sustainable or scale over time is now your ability, to give value, to meet a need, to solve a problem, and to continue to be valuable in that industry. Because of course, as you scale, as you grow, you have maybe competitors already in the market, or as you go on, you have new competitors entering that market. And one of the things that will make you scale over time is your ability to be able, to meet, the customer needs, because, I mean, there's no business if you are not able to meet, you know, the customer at the point of their need. You should be able to solve a problem. So that's just by the way. So let's get into it quickly. Yes, so I always like to start my class with a bit of, okay, let me be on slide so that some of you can see. I hope you can see it very well now. Yes. So, I like to always start it with the statistics. There is a study by Rushman Kaman in 2022 that says that, see, if you fail to keep proper books of accounts, the risk of that is that you are going to lose your most valuable assets. And that your most valuable asset is information. I mentioned that earlier on. I mean, there is this common saying that if you are not informed, you'll be deformed, right? Anyone who is to make any decision, every decision you make is usually premised around an information. For instance, you decided to join this call because you have access to a particular information. Maybe somebody told you about the class. Look, when you join this class, you learn this, you learn that. So on the basis of that information, that was how you now made a decision to now be a part of this. Do you understand? So if you fail to keep proper books of account, the same thing applies in accounting. You lose valuable over your control over your information, and that's your valuable asset. Because you agree with me, as a business, when you make, decisions, I'm not saying wrong decisions now, because what make a decision wrong at the end of the day, if you check very well, is maybe, lack of information or lack of adequate information. That's why you realize that a person had made a wrong decision. Do you understand? So it's important to make sure you keep proper books of, and of course, more than 20.8%, according to a study by Forbes, retail business are taking place online. I mean, e-commerce sales everywhere, right? And I'm very sure everybody on this call, you have an online presence. Maybe you are a tutor, maybe you are into, edutech or anything. Everybody here has a social. I mean, in the chat box now, I've seen somebody asking another person, to connect on LinkedIn because the person is probably doing something that maybe the other person is looking for at the time. Again, do you understand? Again, that drives home the point of, trying to connect with yourself, telling people what you do, and all of that. I don't know if pitch deck is part of, what you guys will still do, but those are some of the things that help you to be able to sell yourself beyond what you do. So, moving on. So, what is business accounting? I just want to be sure everybody's following me. You are following me. Go to the chat box and say, we are following, or I am following. I can't see anything in the chat box. So these people are cooking noodles. So Doris Wangu, okay, I am following. Abayomi, I am following. Tunu, Chisom, Excel, Oladoja, Mobolaji, Moruf, Chisom, Mary Jane. Okay. Only 7 people are following out of 33 people. Okay. Oh, I hope all of you will follow. All right. So what is business accounting? Right. So show your number. All right. Thank you. What is business account? I've told you what a business is and I've told you what accounting is. So when you say business account, it's just like joining 2 words together. And it's all about, dishing out financial information on your business activity. That's all you are doing. And of course, I'll still teach you a slide on accounting cycle, just like the way you have, human being, we have a life cycle of human being. So accounting also has a cycle. So when you talk about business accounting, all you are just trying to do is to make sure that you are able to churn out financial information that perfectly reflects your business activity or your economic events. That's what business accounting is all about. So the next thing you may want to also know is that what is now a small business? Now, where this is very important and you have to pay much attention is that when you say small business, right? Small business is defined within the context of the law. That is CAMA. CAMA is Company and Allied Matters Act 2020. If you are following, put in the chat box, Company and Allied Matters Act 2020. That's the meaning of CAMA. Keep it coming, Company and Allied Matters Act 2020. It defines what a small business is, right? There is nothing as powerful as when something is defined within the context of the law. It means that it's defined within the regulatory framework. And on that basis, everything you do will be validated legally now. Company and Alien Matters Act 2020. Yes. Peter, thank you for that. Okay. Company and Alien Matters Act. Azan, thank you. Mary Jane, thank you. Doris, thank you. OGRR.net, thank you. Itunu, thank you. Mercy, thank you. And I just want to say this on a lighter note. If you are someone to, give your thoughts in the chat box or on me to speak, please do not hesitate to, right? Try as much as possible to be a part of this class. You're going to learn a lot. So what is a small business within the context of CAMA? Now, CAMA says that for you to be called a small business, number one is that you must be a private company limited by shares. You must be a private company limited by shares. That's the first thing. You must be a private company limited by shares. What does that mean? For you to be called a small business within the context of the Nigerian law, at first you must be a private company. What's a private company? Of course, a private company is just a company owned by a group of persons. In fact, CAMA now allows that a private company could even be owned between one or more persons. That's how you just register it as a private company. You should have at least a director within the context of Canada. I think that's about section 596 of CAMA 2020. So for you to be a small business, number one is that you must be a private company limited by share. What does that mean? It could be an association between you and a friend and say, come, let's form a company. Within the context of CAMA is allowed. And limited by shares for some of us who don't have financial background is to say that you are limited by the amount that is contributed to that company as capital in the event of liquidation. What does that mean? For instance, if I decide to form a company with, say, Olaoluwa on this call, to say, okay, let's have a company that maybe, make a supply of maybe table fan or electric fan, for instance. If it is a private company limited by shares, I can say, okay, take my contribution to this business is maybe 3 million naira. Olaoluwa can say his contribution or our contribution to the business is say 5 million naira, right? That means we have a capital of about 8 million, right? That capital amount we have contributed, we will agree that it should be converted to shares in terms of unit of shares. So now say, okay, each of our shares in this company will cost 1 naira per share. So that means if I give him 500,000, that means I'll be giving about 5 million shares, right? Let's say 5 million, no, about 500 units of shares, 500,000 units of shares. They will be giving about 300,000 units of shares since we both contribute 500,000 naira and 300,000 naira as capital, right? What that now means is that in the event of liquidation, saying, oh, we can no longer continue this business, we want to liquidate our assets, get the cash and share it. Let me now assume we now run into debt. The amount we will pay as debt will be to the tune, it will be limited to our contribution in terms of shares. Do you understand what I'm saying? So for you to be a small business, it has to be a private company limited by share, and it has to be a company that has no foreign shareholders. What CAMA is trying to do in the first place is that, maybe I didn't tell you the trajectory of CAMA. It started from, in the military regime when you have it as CAMD, Company and Allied Matters Decree. And what that act or that law is about, it deals with anything that has to do with the registration, incorporation, and winding up of companies. And this CAMA is administered by a government agency known as CAC. CAC is Corporate Affairs Commission, right? I'm sure almost all of you have registered your business, right? If you have registered your business, just put in the chat box, yes. So if you have registered your business, for instance, you would have heard about CAC. So this CAMA is what, guide them as an agency or sister agency of the government. So It has no foreign shareholder. So one of the reasons why we have Kama in the first place is that they want to encourage. Thank you, Vera. I see that. Thank you. DRS, I see that. Hassan, thank you. You guys are following. Yeah. So when you say they have no foreign shareholders, one of the things Kama is set out there to do is to encourage, indigenous businesses, right? For instance, we realize that, look, every year, our schools, our university are churning out graduates, every year. But look, let's now, and the graduates we have every year, I mean, we don't have jobs that can easily absorb them. Okay, let's now find a way to encourage these young lads to come up with business ideas. And when they have those business ideas, let's now find a way to encourage them to make sure that, they are not choked out of business, right? That's one of the reasons why you have Kama to now be reviewed, because the one that was in operation before was Kama 2004. So it was now reviewed in 2020. Some sessions were added. We had some form of business. For instance, we don't have anything like limited partnership before. Limited partnership. What we just had before is supervisory partnership. No. But Summer 2020, for instance, one of the new things it brought was limited, a lot of things. Before now, for instance, for public company, you cannot do your AGM virtually. Your annual general meeting has to be done physically. But Kama 2020, there's a section of Kama that now allow that companies can even have their annual general meetings now virtually. Before 2020, there was nothing like that. Maybe COVID-19 also contributed to it. It changed our mentality. We now understand that, look, we can do a number of things without even seeing each other physically, just like the way we're having these classes now. I don't know you, I have not seen you before, or you have not seen me, you don't know me, and yet we are connected, right? So it introduced so many things. So no foreign shareholder, have no foreign shareholder in this case. I want to make sure that it's indigenous. It's our people. Don't forget, one of the reasons why we have it is to make sure that we encourage young people who are coming out of school to come up with businesses in the first place. That's why we have it, right? So the next thing is that his director should not hold not less than 51% of shares, right? In accounting, there's something we call majority shareholding, and there's something we call minority shareholding. For you to be called a majority shareholder, or you have a major interest in a business, it means that your stake in that business will be over 50%. So what I think they are trying to achieve here, do we have anybody in this building who study law? Anyone study law in school? You study law in school and you're on this call, just put in the chat box. Yes, so I will know. Okay. Maybe the person, maybe I want to assume at least you have someone who studied law, but I'm just trying, that's not the problem, right? I just want to make a point to say, in law, there's the spirit of the law, there's the letters of the law, right? The letters of the law is just what we are reading now. It's director, not hold less than 51% of the shares, yes. But spirit of the law is now what that letters of the law intends to achieve. Like you're trying to read meaning to what that thing is saying. So what we are saying is director should know less than 51% from a deep knowledge of accounting and finance. It's simply to say, if I have a stake in a business, for instance, it will also influence the kind of decision I make, because I know if I make any decisions, and if the business crashes or the business collapses, I mean, I will also have myself to blame because I have a stake in that business. That's why you see even most companies, when they appoint their CEOs, even now, all right, chief executive officer, check, most of the chief executive officer have a stake in that business. So as you're trying to run the business, to the best of your ability, you're also having at the back of your mind that, look, if I steer the affairs of this business in the wrong direction, I also have something to lose, right? So the next thing is that none of his member is a government or a government agent or nominee. Yes, don't forget, it is set out there to encourage, young people to, bring up their business idea, have a business and have them run it, right? So it should not have any member of government or government agent as its nominee. And you could recall, even if you're applying for certain things, say you want to get a job in ministry, like all this Ministry of Finance or any government MDs, ministry department and agency, or even when you want to apply to some things, scholarships, maybe even outside the country, you see there will be a point like a caveat where they will ask you, are you related to anybody in the government or in this school or something? So just want to make sure that it's open to people out there, right? And it's not, subjective. And this is where I'm going. For you to be a small business, Kama 2020 says your turnover must not be more than 120 million naira. Your turnover is your annual sales, your revenue from sales. It must not be more than one. That means once your revenue is not more than 120 million, you are seen as a small business, and your net asset is like your equity, right? Your capital, in a layman's language, should not be more than 60 million. It means that once your turnover is not more than 120 million and your net asset is not to 60 million, you are recognized within the face of the law as a small business in Nigeria. Did you get that, guys? Let me have somebody on mute and repeat that. Just one person. Be sure you are following.
I'm following, sir.
All right. Well, repeat what I said. That's what I said. Repeat what I said.
We are following now. I'm with you.
Your turnover should not be more than 120 million a year.
Great. Yes, and your net assets is not more than 6. It's not. I'm not saying it should not be. It can be, but for you to operate within the confines of a small business, if your turnover is not more than 120 million, you'll be enjoying it because there are benefits for small businesses, as some of us may know and may not know. And your net asset must not be more than 60 million. Now, let's check the benefit. But before we go ahead to even check the benefits, right, it's also important that there's also a Finance Act known as Finance Act 2019. It was reviewed in 2020, it became Finance Act 2020. We have Finance Act 2021. No, we don't have 2021. We have 2020, and we have 2022, right, which was signed 31st of December 2022 and operational in 2023, right? So Finance Act also came into, if you check, if you're conversant with what is happening in the Nigerian business space, you realize that 2020, 2021, witness, a high rate of, review of our Nigerian law, particularly as it relates to businesses, because the government now realized that they need to diversify away from oil revenue. And how will they do that? They need to encourage businesses and attract FDIs. FDI is called foreign direct investment. Even try to woo, foreigners to come into the country and invest and all of that. And that was what informed, trying to review all our, laws, outdated laws, to be in tune with what is obtainable in the 21st century, and that was why we now had Finance Act. And what Finance Act is now trying to do is also to make sure that the finance space and businesses in particular, for instance, the focal point was on businesses, to make sure that you review some existing laws, to make sure that, you kind of give an equal playing ground to all businesses, and they are encouraged, because the honest truth is that no country grows without investment. It's not possible. When you have people coming to invest, it's because in the first place, your business, climate space is favorable. That's why they're able to come in, make investment. And mind you, if they come in and make investment, it will also, I'm trying to analyze that. So some of you will say the reason why all these things are important. In the first place, it will affect the GDP of the country. The total output of the country will also, increase, because coming to the country by that business would have contributed to it. That's one. Apart from total output, it will also help the unemployment rate, because there is no way you have businesses coming into Nigeria, even though you have, a percentage of it to be expatriates. But I think in labor law, since maybe about 75% of your employee labor force, or 70% or so of your labor force should be, indigenous. They employ Nigerians. And aside from the fact that it's contributing to unemployment, another angle you can look at it from is that it will also increase the country, the government's, revenue base, because a lot of people will now be dragged into the tax nets. When somebody who is unemployed become employed, you start paying tax, the likes of pay as you earn on your salaries. You understand? So all these things have economic implications. That's what I'm trying to say. So Finance Act 2020 or 2019, although it was, signed into law in 2020, January precisely, now says that it now redefined what a small company is, right? To say a small company, you will be called a small company when your turnover is less than or equals to 25 million. That means it now abolish that section of Karma that I read previously that says that your turnover should be about 120 million naira. So this one, the Finance Act is saying, is operational because FRS, Federal Inland Revenue Service, which is in charge of the, assessing people to tax, collecting tax, and even accounting for those taxes on behalf of the federal government. Taxes that are within the jurisdiction of the federal government are collected by FRS, and FRS collects tax for all companies in Nigeria, regardless of their state of residence or establishment. Right? So if you're a business, whether you're a small business or you're a whatever, it is the FRS that you remit your tax to. And that's why you see some of you who are registered your business, if you can relate to what I'm saying, after you register, you'll be asked to also go to FRS to go and register, get your tax identification number, and start filing returns, right? So coming back to this, Small company, your turnover should be less than or equal to 25 million. What that means is that if your turnover is less than or equal to 25 million, it means that your company income tax will be zero. That's where we are going. Vera said exactly. Thank you for confirming that, right? That means your turnover will be what? Less than or equal to 25 million. I mean, whatever. I mean, your company income tax, will be nil. So once your turnover is less, that means in the face of the Nigerian law, you are not entitled to pay company income tax and tertiary education tax. Mind you, because I always drop a caveat here so that you don't go out there and be misinformed. What you are only exempted for is company income tax and tertiary education tax, and not every other form of tax that you might be eligible for. It does not mean you are exempted from value-added tax if whatever thing you are selling or whatever service you are using is a vatable goods. You must pay value-added tax at 7.5%. That's the current rate in Nigeria. Even though in Nigeria, I mean, we talk about, we complain about tax and all, but generally the rate of tax avoidance in Nigeria is usually high. And Nigeria is one of the countries that pay the lowest in terms of tax. For instance, in the UK, value-added tax, I just said in Nigeria is 7.5%, in the UK is 20%, right? Although I would not have blamed, about 98% of the UK revenue comes from tax collected by HRMC. HRMC is like our FRS that collect tax on behalf of federal government. So in countries like UK, the tax system is so organized or so efficient that you cannot even avoid tax. Even if you do, in the shortest time possible, you'll be caught and you'll be made to face the wrath of the law, right? So you don't pay company income tax and tertiary education tax. What somebody will ask me is, what's tertiary education tax? Every company in Nigeria is, obligated to pay a percentage of their, accessible profit. They pay it to a fund known as the tech fund, tertiary education tax fund. Some of you, when you went to school, on the buildings of your school, you see something like tech fund 2010, you see something like ETF, right? Can somebody confirm that? You see some buildings in your school or some facility, maybe a generator, maybe a power plant, maybe a hostel, you see tech fund, intervention fund, 2020. So where they get the money from, is tech fund. It's a fund organized by the government where, okay, they are confirming, yes. Thank you, Oladoja. Thank you, Doris, and the rest. Yes, true, yes. I know some of you must have been saying that, but you don't know what that means, right? So before 2011, it used to be called ETF, Education Trust Fund, right? And the contribution of each company to it is usually 2% of the accessible profit. But in 2011, thereabout, it became TET Fund, Tertiary Education Trust Fund. So every company in Nigeria, apart from all these taxes, that's why I said there are other form of tax, then pays 2% of the accessible profit as tertiary education tax. So the government has an agency known as TET Fund. It's a fund where they manage those money. Then schools, tertiary education can now reach out to them, based on their needs. And after proper assessment have been done, they now give them the money required, about 5% of the money required to now, construct whatever that thing is. If you go to Unilag, for instance, you see some building where you have, TET Fund 2011, 2013, amongst other things. For example, if I'm just saying that on a light hand, to be finished from Unilag, for example, there is a faculty, I think Faculty of Arts, 1 5-story building, their main faculty, but you see it somewhere on top of it. TET Fund 2013 or thereabout. So it means that that building was constructed, or the money, about 5% of the money required to construct that building was given by this fund, TET Fund. But now, TET Fund, Social Education tax is now 3%. It was reviewed, I think, by Finance Act 2021. It became 2.5. No, 2020, yeah, it became 2.5. In 2022 made it 3%. In fact, there was a controversy then, which I don't want to bore you with in these classes. It's a controversy on another level on why this tertiary education tax should be, increased. Why it shouldn't be increased, So coming back, for you to now be a medium company, once your turnover is 25 million and 1 naira, you have been migrated automatically in the eyes of the law or in the face of the law to a medium company. And when you are a medium company, it means that you now pay a company income tax of 20% on your total profits or adjusted profit. And you now pay tertiary education tax of 3% because you have been seen as a medium company. And of course, you become a large company once your turnover is greater than 100 million naira. That's all these companies we see here, and DMTN, all those companies. Once your turnover in a year, that's your revenue from saying a year, it's over 100 million. Then in the face of the law, you're already, a large company, and you pay the normal 30% company income tax, because that's the standard company income tax rate in Nigeria, 30% of your taxable profit. Then you pay tertiary education tax of 3%, amongst other things. Right? Do I have any question? Just to be sure you are following. If you have any question, let me just attend to that in the next 2 minutes. Yes, please. Any question?
Hello, sir.
Please go ahead, please. In the
All
next
right,
2
thank
minutes.
you. My question is just, you mentioned that even small businesses are expected to pay every other tax. You mentioned
Yes.
VAT. So
Yes.
apart from VAT, what are the other tax that small businesses are expected to pay?
Well, it depends on what you're doing or your line of business, right? But VAT is one of the commonest one that you will pay. Another form of tax you can pay is maybe stamp duty or electronic money transfer, fee and all of those things. That's why you see, just on a lighter note, even in your corporate account, for instance, when you make certain transfers, for instance, you'll be charged an amount as electronic transfer fee and VAT on it. That's why you see some of you, when you make an interbank transfer, say maybe GT to First Bank, in fact, any amount, you'll be charged 10 naira as a commission, and you now be charged 0.75. Can you confirm that? So in total, you be charged 10.75. That's 75 is 7.5% of 10 naira. So that means that that service that bank is rendering to you is a vatable service. And the bank is entitled or is saddled with responsibility to now charge all those VAT. And by 21st of every month, because the VAT Act of 2004 has amended, says that every company must file their VAT return 21st of every month, following month. So by the 21st of this month now, those banks will now file their VAT returns. Okay, this total VAT we had collected from every money transfer, electronic money transfer that people have done under this period, right? This period of time or this month, then they remit to the federal government. If it's for companies, collected by federal government, and who collects on behalf of federal government, FRS. And if it's for individuals, in fact, for individuals as well, VAT is collected by, another one you can pay is capital gains tax, but that one is on a bit on the, for example, if you don't have a finance background, maybe when you start, as you have your business, you begin to employ one or two people, you understand it. So capital gains tax, for instance, is a tax you pay on the disposal of your assets, right? For instance, you bought an asset, maybe sometimes in 2020 at 2 million, you now decide to sell it now, right? And there's something known as capital allowance, right? Capital allowance is like a reduction that is allowed, to provide for that asset, to provide for ultimately what they are trying to do is to make sure that at the end of the day, will give you like a relief every year from your accessible profits as a contribution to the amount that is needed to buy that same asset again at the expiration of the useful life of the asset. So, for instance, the useful life of the asset is 5 years, for instance, right? And you bought it for 20 million. It now depends on the asset too, because we have capital allowance table. It's also under the company income tax. There's a schedule. If it is a furniture and fitting kind of this furniture, 25% go as initial allowance, 20% go as annual allowance, right? If it's a machinery or anything that has to plant related, it's 50-25, right? Or if it's a motor vehicle, it's also 50-25. 50 as initial allowance, you'll be granted 50% of that asset cost to subtract it from your profits for that year. That means you'll be allowed to see it, let me say it in a layman's language, like an expense, subtract it so that the profit you'll be charged to tax would have reduced. And that 50% that you are charged is for you to keep it somewhere so that at the expression of that asset, you would have saved. I'm trying to explain it in a language you understand. You would have saved the equivalent amount needed to reinstate that asset, to buy that same asset again. You understand? So it's just to encourage businesses and all. So, you can pay capital gains tax, right? So when the tax written down value of your assets, which is the difference between the cost of your asset and the capital allowance that the asset has enjoyed till date, is say 500,000. When you are now selling the disposal value of the asset, when you are selling the asset, you now sell it, say 1 million. What's the difference between 500,000? Well, that means you have made a profit of 1 million minus 500,000, that's 500,000, right? That one is called what? Gains. We call it gains on disposal of assets. So we now charge, the law now says that on that gain, you are also entitled to pay a tax on that gain. And the tax paid on that gain is 10% according to the Capital Gains Tax Act of 2004. With 10%, 500,000, that's 50,000 naira. That's also capital gains tax to the federal government, FRS. Did you get the point? So there are other taxes you pay. I've just given you like 3 other examples apart from company income tax, right? But the most commonest one you usually pay in most cases is VAT, value added tax. I hope that answers your question. Peter Adisa, you the one who asked the question.
Very clear, sir. Thank you so much.
All right. Thank you very much, Peter. Yeah. So moving on, guys. So what are accounting record? I mean, I've mentioned all these things, so I won't waste time. Yeah. I mean, account record are documents involved during your financial statement for a business. You need to keep record, of course. And like I mentioned, there are regulatory bodies that require you to keep your accounting records. In the event they need to be reviewed, your authority can come and say, let me check your books of account. If you have been keeping proper books, although now, kudos to the former FRS chairman, that's Mohammed Nami. I mean, the current one now is Zak Adedeki, right? But the former one was Mohammed Nami, and he was the one who digitalized the Nigerian tax system. Instead of going to the FRS to file returns, now you can file return via the software, created during his own administration, called Tax Pro Max. So from Tax Pro Max, you can file your return for your companies at the comfort of your home, and the system automatically calculated the amount due to you as tax. And you pay the tax, you get your tax clearance certificate, TCC, and you move on. So what we are saying is that, I mean, you can pay tax now from the comfort of your home, but the point here is that you need to make sure that you also keep proper books of account because they can be reviewed. The tax authority can come to your company. And one of the grievous offense within the Nigerian tax law space that attracts imprisonment is when you attack tax officials and you cause them bodily injury when they come to your premise. If you still, maybe you evade tax, you may not, although there are options of, I mean, you can be in prison, but there are options of fine in that case, like fine of that amount you have not paid and interest on that amount you have not paid, equivalent to the monetary policy rates operational within that period under review, right? But the one that I know that you don't have an option of file is when you call bodily injury. So you have to keep proper books of account. So and account record are review for audit, compliance check, and other people. Yes, there is audit as well. Auditor, we want to, when you start growing, you become a public business, like in KAMA 2020. KAMA 2020 mandates that all public companies, their accounts must be audited, meaning that you must have an independent examiner coming to check the books of accounts, see whether it shows and express an opinion, whether it shows a true and fair view of what it purports, meaning that whether it shows a true and fair view of the activity of the business. So it's important to know that. And what are the basic bookkeeping terms you need to know? Assets. I mean, everything you buy that is expected, I mean, you parted with resources to buy them, and from it is expected that future economic benefit is supposed to flow into the business. It's called asset. If I buy a laptop for my business, I have spent money. That means, it has cost me resources in the first place. All right. And I expect that I get benefit. That laptop flows economic benefits into the business in the future. How? Because I'll use that laptop over time for the business. And as I'm using it for the business, let me say in layman's language, it's bringing money because I'm using it to work for money. You understand? Then, of course, we have an accounting standard that speaks to that. That's IAS 16, International Accounting Standard number 16. It's called property, plant, and equipment, right? Then liabilities, all obligations to parties, external parties, people you are owing, liability, your creditors. Sometimes we call them payables in accounting. We don't want to say creditors. And liability, every form of debt you are owing. We classify them under liability in some of basic bookkeeping time you need to know. Income. Some are all money you receive as a result of engaging in economic activities from other means, other sources. That's your income. What somebody will ask me is that what's the difference between revenue and income? Yes, revenue is strictly money you receive as a result of the object clause of your business. Object clause means what your business is registered to do or to render as a service. I mean, a lot of you here have registered your business. There's an object clause in your memorandum of association, your MOA, when you submitted it, to say, okay, this business will be engaged in selling makeup, borrow me English, makeup, what do you call it? What do you call those things? Makeup equipment or makeup materials. That means that's your object clause. It means that as a business, you have been registered to sell makeup tools or kits. Yes, that's the right word I was looking for. Kits, makeup kits. If tomorrow somebody now told you that there's no money in makeup kit again, where there is money now is when you go and When you start selling flour to make cake, you now divert in the same business name to go and be selling flour. In business law, we call it ultra bias. Ultra bias. I'll put it in the chat box. Ultra bias is when a business now continues to operate outside its object clause and it's illegal. If you must now selling flour, you now need to go back. It's in the chat box now. You now need to go back to that Corporate Affairs Commission and now register again to say, no, my business, I'm no longer selling makeup again, no makeup kit again. I now want to sell flour because that is where money is now. Do you understand what I'm saying? As funny as that may sound, it's the honest truth. We have a lot of businesses who are operating outside what they are registered for in Nigeria. Maybe because maybe our regulatory environment is not as tightened as it should be, right? But you don't want to be caught on the other side. Right, expenses. So these are all the money you spend to operate your business and is directly related to the sale of your goods or services. Yes. Moving on, cash flow. So cash flow is the movement of money in and out of the company. So cash flow just tells us what you have spent money on over time, right? And it's governed by IAS 7, International Accounting Standard number 7, right? Then you have account payable. Of course, I've mentioned that payable is all the people you are owing. In layman's language, we used to call them creditor. So people that supply you goods, for example, they are your creditor. So you need to, and you call them your pay, right? So the next one you need to know is what revenue. And revenue, like I mentioned, is all the monies that you collect in the process of selling the goods or service that you are registered for. Your object clause, that's revenue. In account receivable is all the individuals owing your business, your customers that have not paid. Equity or capital, I've mentioned it earlier, right? It speaks to the money in a layman's language that you invest in the business to start the business. And of course, general ledger shows the accounts you used to stop, sort, and summarize all your transactions. Then what is your journal? In accounting, sometimes we call journal principal books of account, right? Principal book of account in the sense that we believe that journal should record your daily transaction, right? And all transactions, whether credit, whether cash or not, and trial balance with test the arithmetic accuracy of your transaction as recorded in specific ledger. And when you hear leverage is talking about debt, the ratio of maybe your revenue, your profits that it should be that is to be used to service debt. So when you hear leverage generally, you're talking about debt. Then the next question is why bookkeeping or accounting? Why? Of course, you know the answer already on this call because I've overflogged this. You need to keep the accurate transaction record. It's important. You need to also track your asset and liability. Yes, to know, okay, over time, this is what my asset looks like. This total amount of money I'm owing people. It helps you make informed decision. Then you need a business decision guidance. Of course, we mentioned that. Then compliance with legal regulation. I've just told you. You are required to file returns, for instance, according to the Company and Allied Matters Act 2020, and according to even the FRS Act as a business, you need to file returns to the FRS. So for you to comply with those legal regulations, in the first place, it starts with keeping proper books of account and preparing your financial statement, right? Then it helps you also control over fraud and risk. Yes, when you keep proper books of account, it is even easy to detect fraud when they are perpetrated. When you keep proper books of account on a timely manner, because there is a common saying that prevention is better than cure. You understand? Especially when you get to know that early enough is important. Then economic data recording, the likes of MBS use most of this thing for statistics to say, okay, the total of small businesses in Nigeria, they are about 30% of the total number of businesses. Oh, they contribute, say, 5% to the Nigerian GDP on an annual basis. So sometimes all these MBN, Nigerian Bureau of Statistics, they are all government agencies. They meet other sister agencies to get this data. They can meet FRS to get the data, right? To say, okay, this is what the revenue of all small businesses that have filed returns so far with us looks like. And on that basis, they use it to publish out, reports for our consumption and for our kind information. Is somebody talking? You are muted. Okay, then we have financial budgeting and planning. If you know how your business is doing now, faring, it can help you project into the future and plan very well. Somebody's writing on my screen, Anna, well done. Then information for financing. For instance, if you want to go to the bank to borrow money for loan and everything, they will ask for your financial statement. And that will help them to know whether your financial statement have that kind of look that will make you be able to make payments or even return the money they are borrowing you, or if you worth that money. That's the point. Then there's management of cash flow. Then there's tax preparation and filing. Other things you need to know are users of financial statement. You know them already. Within the business, you have shareholders, those are the owner. You have management, the people appointed to manage the business on behalf of the shareholders. You have employees, of course. Your employees want to see whether they should wait or they should search for greener pasture, because they can easily see from your books of account whether you are doing well or not. If you are not doing well, they will quickly look for other jobs. So they need those information. Tax authority needs it, of course, to charge you to tax. Lenders like bank, I've mentioned that. Government agencies, CAC, you have to file returns to them. The trade unions, they need the check. They should know whether they should negotiate for a higher wage rate from your employer. They need it. If you are now making more money, we can now, file for a higher wage rate, because this business is now doing well. Before it was a small business, we understand, but now that it has grown big, then it should pay us more. And that's, they look at that, and also the economic condition. That's what is happening recently when you see the Nigerian Labour Congress now. The new minimum wage request is submitted to the federal government. I think I was reading yesterday on the pages of the news. It's about 516,000. That's the minimum wage anybody must earn in Nigeria, on the minimum. I laughed when I saw it, because if you have the kind of background I have in financial analysis, you know that looking at the current economic rules and also the current operations of the government and the finances of the government, you know that is not even in the next 3 years will any Nigerian government pay 516,000 thereabout as a minimum wage. Yes. So, of course, suppliers, customer, public, and other interested party. The word of source documents. Source documents are important. They help you from the word source. They are those documents that evidences that a transaction has happened or a transaction has occurred, right? And they involve your receipt. What shows that you have received an amount of money or you bought something somewhere is your receipts. And why source document is important is that for audit purposes, when auditors come, you understand, for audit purposes, we need to also check. If you tell us that, oh, this is what my expense look like, I will ask for the source document. What are those documents? Can you show me? There's something we call audit sampling. Like, I don't want to bore you with all those things, right? So we know that you've done it. If you are a large company like the likes of MTN, we know you have a lot of transactions. We don't bother ourselves. We create what we call materiality threshold to say that, okay, any expense above this amount is material, and as such, we will check those expenses in depth to see whether they actually incurred only, reasonably, exclusively, and necessarily for the business. In tax, we call it WREN. It's in the chat box. If the expenses is incurred only, reasonably, exclusively, and necessarily. I hope you guys can see the chat box. Only, reasonably, exclusively. Can you see the chat box? Hey, are these people here? Are you here, guys?
Yeah, yes.
Yes,
Oh,
sir.
okay.
Yes, sir.
It's like there's a lag in connection. Sometimes before I finish speaking, maybe before you guys hear and respond. All right, thank you. So they want to check if those expenses are incurred only, reasonably, exclusively, and necessarily for the business. So I want to check the 1 million naira you say you incur in entertaining guests from Bank of America. Let me assume you're a small business. Is it true that the whole 1 million is what you use to entertain them? Out of the 1 million, 500K, you pocket 500K to go and chop life. You say, after all work and no play make Jack a dull boy. It means that your business will be given an adverse opinion in that case. And they will let you know that saying does not apply to your business, right? So what I'm just saying is that all these are what evidences that a transaction has happened, from invoice to this deposit slip to bank statements. That's why you see sometimes when you go and file your returns with FRS, they will ask that you attach your bank statement, the bank statement of your business accounts. They want to see if all the claim you have in your financial statement is tied to your bank. If it's not tied to your bank statement, then they know that something is wrong somewhere. Of course, check counterfoils, PO report, purchase order, debit note, and credit notes. Then some accounting concepts you also need to know, like legal entity. Legal entity says that a business is different from its owner. Immediately when you are becoming a company usually enjoy what we call legal entity. For instance, Dangote Group is different from Dangote himself as the legal entity. That means that when the business misbehaves, the business can be sued in its own name different or standing alone from the name of the owners of the company. That's what it means. Then historical cost concept. Hey, who is that? We are inside already now, madam. Read it yourself. Come inside. Historical cost, right? So historical cost is saying that, look, when you buy an asset, you recognize those assets based on the cost at their initial purchase. That's meaning of an historical cost. The cost at their initial purchase and not uh, the, what do you call it, and not the realized value or the revalued amount. Although you can revalue your assets on, certain basis, but that's beyond the scope of this class, right? The realization concept, right, is saying that sales or revenue are recognized when they are earned and not necessarily when they are received. And expenses are recognized when they are incurred and not necessarily when they are paid for. And from that basis, we prepare financial statement for our businesses. Because I'll still ask a question in a bit, for instance, right? From that, that's why you see that when companies are telling you they make profits, profitability is not sufficient to hold a company. When companies are telling you they make profit, and you still find that companies are telling you they make, at the end of the day, they end up folding up. You know, ask to say why, but this company was making profit. The thing is that in businesses we use accrual based concept, and it means that sales you are recognizing as sales. It is not all of them. I'm trying to speak in the language you understand. It is not all those sales that you have actually received money from your customer, but you still recognize it as sales because that's what accrual basis as a basis in accounting as stipulated. You still recognize it as revenue. So the question now here, the question here is that, look, you have earned the money, of course, but have you received the money? You have not. But you recognize it as part of your sales, which you now use to compute your income statement to show whether you have made a profit or loss. Do you understand? That's accrual basis for you, right? But that is why we also ask that you prepare cash flow statement as part of the general purpose financial report as postulated by International Accounting Standard number 1, which I will show you in a bit. Right? The cash flow statement now shows the actual movement of cash in the business, in and out of the business. As you are spending money, it's reflected in your cash flow that involve thing with money. As you are receiving money in real time, it's also being shown on your cash flow statement, right? So that's what realization concept is talking about. Then going concern, we believe that a business will continue to operate in perpetuity. In the nearest future, you don't expect that the business folds up. But if there's a situation where there are circumstances or threats to the going concern of a business, it is allowed that you disclose them on the face of your financial statement as part of your disclosure to say that there's something going on now that is a threat to your business existence. So it's allowed. The you should be consistent with whatever method you have decided to use to see, when you have some transactions that happen, you want to check, are they material? Are they capable of distorting your financial statement? Those are part of the things you want to check. The substance over form, you look at the substance over the legal form. What is the weight of this? So sometimes all these things helps us in recognizing, recognizing certain transaction. Then of course, money measurement. I mentioned accounting circle earlier, and I told you human being just like we have circle from conception to being a fuel to. So of course, I'm not a biologist, so for scientists in the building, just just use it like that. From poetus to being, you are giving birth, so you are crawling, you are walking, and at the end of the day, everybody dies. The same way accounting as a circle, from source document, like I told you earlier on, to journals, to ledger in the books of account, to trial balance, to test the arithmetic accuracy of the transaction you have posted, then to your financial statement. What does your financial statement looks like? That's, as I mentioned, stipulated by IAS1. That's the general purpose financial reporting. Financial statement should contain your income statement, what you know as P or L account, which shows your profitability, statement of financial position, what you know as balance sheet, which shows the state of affairs of your business, tells us what your asset, your liability, and your equity looks like. Statement of cash flow, which shows the liquidity of the business. Yes. Then statement of changes in equity. If you're a public company, maybe there's a movement in your equity, maybe someone contributed more to capital during the year. Even when you make profit during the year, you use it to adjust. There's a portion of your profit we call retained earnings that you retain in the business to also, build the business, and then the notes to the financial statement or disclosure, amongst other things. Then the class discussion we have now under just about 2 minutes It's profitability and liquidity. Who can tell me the difference? Quickly. Profitability, liquidity. Anyone? Profitability, liquidity.
Osa, let me try.
Please go ahead.
Okay, the liquidity is just like asset that can easily be turned to cash. Like you have your cash in hand, you have your cash in bank, your stock, your debtors and all that. That is for liquidity. That asset that easily turned to cash when you need something.
Good. Then
Yes, sir.
profitability. Then profitability just shows your financial performance, whether you are profitable or not. Now, what I would just like to stress, thank you for that. What I would just like to stress on that here is that as long as it's good for a business to be profitable, it's also very important for the business to be liquid. As all of you are having businesses, you should understand that it's good for you to say you are profitable. And it's also better for you to also what, be liquid, because you need money to run your business in the short term. If you are not liquid, you won't be able to pay salaries. And if you are not able to pay salary, what happens to your staff? They will leave. If you are not liquid, you are not able to meet your running costs. Maybe buy fuel, run the business on a day-to-day basis. So it's important to be liquid as long as you are trying to be profitable. That's the point you are trying to make. And what are the basic regulations you need to know? IFRS, that's International Financial Reporting Standards. That's what we use in preparing financial statements. Then you need to know what Company and Allied Matters Act is saying. I've mentioned that. What Finance Act is saying, we mentioned that. Company Income Tax Act, I also mentioned that. That's what governs everything that has to do with companies, their payments of tax and all, and their activities. The Personal Income Tax 2011 was amended. That deals with individuals. These are things I've mentioned in the course of the slide. And what are now the general tips that you need to know to make that your business stay afloat of collapse? Number one, you understand the peculiarities of your customer. Understand that all customers are not the same thing. On a lighter note, you just need to know this, because it's one thing for you to prepare to keep proper books of accounts, another thing for you to have some basic things or tips that you need to make sure your business scale over time. Number two is that you separate business resources from personal resources. Yes, your money, your business money is different from your own, but that's one of the reasons why businesses have collapsed over time in Africa. When we don't understand that, you say, maybe it's my business, it's my money now. No, it's different. If that business must succeed, you must renew your mind. You must have a paradigm shift in the way you think to know that your business money is different from your personal money. Just like somebody who owns a fashion store that the fiancé visit or the girlfriend visits. Say, go to the store, pick any shirt. It's not bad if you do that. But the point is, you either pay that money from your personal purse to the business purse, assuming that it's a sale, or you treat it as drawings and use it to reduce your capital in the business. Don't just say, yeah, it's still my money. You have to worry about it. Yeah. If I give this out to entertain people, no, it should be different. Number three, ensure all funds are accounted for, particularly cash can be moved. Yes, because in audit, one of the things we pay attention to is cash. So ensure that all funds are accounted for, right? And you need all the things to secure grant. I'll show you some grants you can look out for as a small business in a bit. You need it. They'll ask for you can just shoot yourself in the leg regrettably, right? Then you make provision for tax, and the deadline is usually every 6 months. Yes, if you are paying company income tax, the deadline is usually every 6 months. So you make provision for tax. Then the next thing is to keep track of your expenses. It's important. You keep track of your expenses, right? And I'll mention some apps you can download on your phone or on your laptop that can also help you to do that, right? Then maintain daily record, sales day book among others. Then have an easy payment method, because not all your customer can pay through a particular means. Some of them will tell you, this is how I can pay, this is how it's convenient for me. Understand that. Then prioritize audit trail. Audit trail is tracing a transaction from inception to conclusion. When auditors come, you want to trace your transaction from beginning to the end. So if you have that in mind, you keep proper books of accounts yourself from the beginning to the end, because you don't want them to come and now you are caught on the other side. Keep track of your account receivable. That's people that are owing you, your customers, and you keep track of them and make sure you collect them as soon as possible. There's nothing as good as when you make a sale and you're able to get in the money as soon as possible. We call it receivable cycle in accounting. Then prioritize using software no matter how little. Yes. So what are the grounds you should look out for? You can take a screenshot of this page As a small business, you look out for the Bank of Industry grants, look out for the Tony Elumelu Foundation grant. In fact, the last class I took on this business and financial management, I think last week, I had two of them or one of them on the call that was a beneficiary of the Tony Elumelu Foundation. And when I was just talking about it just like this, one of them was just asking questions. I applied, I did not get it, and the lady asked a question and I answered, not knowing that. And one of the things I told her is, look, you find the best way to get an opportunity is to find somebody who had gotten the opportunity. You can easily, get what you need to do to also land that. But it's not knowing that there was somebody on the call who was a beneficiary of the Tony Elumelu Foundation, and they connected to each other. And you can see the power of sometimes even speaking out and all of that. So if you have enjoyed any of this grant before, please do well to also help your colleague. I know you guys have a WhatsApp group chat. Do well to help yourself to say, these are grants that you'll be given. You don't need to pay back. So I think Tony Elumelu is about $5,000. Imagine $5,000 being pumped into your business. You know where your business will be now. Then what are the software you can also explore, right? What are the software you can explore for the purpose of, this conversation? Microsoft Excel, you can download Microsoft Excel, and you can begin to know how you can use it to keep your daily records, right? You can download QuickBooks, although QuickBooks is usually paid and is real time. And if your business is now growing bigger and bigger, you can begin to look at software like QuickBooks Sage. But the ones you can see is for now that is free, Microsoft Excel. You can also download Expensify on your mobile. It can help you track your expenses on your mobile phone. You can also download ZooBooks. You can also download Bookbee, right? It can also help you, keep proper books of account just on a smaller scale and keep records, right? On a smaller scale. So, yes, we are at this point now. Any question? Any question? Any question?
Hello, sir. Yes, sir. I have a question,
Yes,
sir.
go ahead. Go ahead quickly.
Please, are we going to get a record of your teaching?
Yes, you're
Will
going
it
to
be
get
shared?
that. The administration will share it with you.
Okay, sir.
That's not a
Thank you very
challenge.
much.
Yes. Any other question, please? Any other question? All right. In the absence of no other question, I think we can bring the class to a close. But you can check me up on LinkedIn. Elijah Folabi. And check me up on LinkedIn. Have questions that cannot. Maybe you have not conceptualized. You are yet to conceptualize it here. Do well to reach out. I will be glad to be of help to you and your business. All right. Thank you very much, guys. Saifat, over to you. Saifat, can you hear me? Please hold on. Saifat should join soon. I'm sure there will be some couple of announcements she needs to pass to you guys. Um, okay, Saifat.